Hello everyone and welcome. Today is the 7th of February. This video basically supports our February 1st to the present day on February 7th market outlook and our market view presentations on our website. We are currently live, and on this video we have the US dollar index working at the current price of 78.58 basis point, breaking the consolidation here on the 79.50, and let's see if we can get across here at the low of 78.70. So currently at this time the market is moving lower as we have expected after you could see here that there is a divergence comparing it with the stochastics and the RSI, pushing the US dollar index higher correspondingly, but not higher than the 79.50 high. By the way, this is a 4-hour chart, but however on this particular date on the 31st of January, our basis would be in reference to our January 31st US dollar index chart, and based on our February 1st market view, which we have blogged on our Megatrade blogspot.com. With reference to our February 1st US dollar back lower from a correction, we have indicated that that particular bar was simply an intraday bar as far as the technical perspective is concerned, and that particular slight recovery from its recent low of 78.74, that was on the January 31st towards the 1st of February, and that was the reference where it made a slight correction on the technical perspective because of that particular divergence that signaled a positive tone for the US dollar to correctly move higher. And looking at it on a daily, touch the moving average at that level on the 79.50 level. Correspondingly, if you look at it, the candle bar, remember that particular bar we were mentioning, an intraday bar, and prior to that the opening gap higher would show on the weekly here that it is way below the exponential moving average, that signal a negative tone to continue for the US dollar on a weekly basis. However, the daily divergence was the simplest correction that it had made, but no higher than the 79.50, and currently right now live at 78.59. As we made mention, again going back to the 4-hourly chart, that we're looking at the 78 even 05 basis point as its target, which is actually the low of this particular candle bar, at 78.10, which was dated on December 08. Now, with reference to our Asian, European, and US sessions on Forex trend following number 2 on the 4th of February, the update here for the euro and the pound, as well as the cross rates and the US dollar index, where a summary and a review of our outlook would be for February 6th to the 8th, which we published on the 4th of February, mentioning that the euro would still be moving higher, and considering the low here touching at 61.8 Fibonacci retracement, where the 1.3025 on this two particular low served as a double bottom for the euro, signal for a positive tone even on the stochastics and the Williams percentage rate, anticipating for the euro to continue to move higher. That is also in conjunction with the sterling pound making a correction here, but closed higher on the 1.5792, signaling a tug of war between buyers and sellers. Although here on you would see that the purple line here is a near-term trend line where it broke on a daily basis, and excuse us for that, and that's an alert that the prices has moved higher. And looking at it more, that was a particular false penetration on the low side, signaling a daily correction for the sterling pound. You can always reference our foreign exchange market view analysis here on our website at megatrade101.com. Now, going back to our analysis, since our outlook for the US dollar from January 31st to the present time is for the dollar to move lower, still trying to attempt the 78 even 010 range. And like we mentioned, this is a live current market right now. Since we already have the previous pound position, we have decided that sterling yen would be an appropriate cross rate for this particular time, although we made and anticipated that the channel for the pound in itself on the previous has been a correction, as we made mention. And here on the sterling yen, we have anticipated, even if there was a corrective move on the US dollar, the outlook for the pound to move higher than the yen is there, since it's also above the moving average within the rising channel, together with the euro yen. So breaking here, this looks like a triangle formation as well. But however, this particular movement, comparing it with the sterling yen, had likewise been a signal for a possible move higher. Again, this is on a daily basis, where the current price right now for the sterling yen from our price level here at 121.19, currently right now at 122.11, comparing it with the euro yen in itself at 100 even 0.38. Now it's 101.90, which is quite substantial, as you could see that the Williams percentage rate as well as the momentum have increased on both cross rates, and this is due also to the fundamental fact that there is a possibility for the euro crisis in Greek would be able to have some resolution once and for all. However, since we are in the money, but what is equally more important is we have anticipated a move, although this is now the confirmation of that speculative decision. On the weekly basis here, on the weekly chart rather, which is working at the high of 122.19, and the anticipation here is to try to touch this particular high established on December 18, which is at 122.85, apparently still higher than the extensions. Extensions here would be at the 123 channel, where remember that there's no such thing as a straight line or a straight up or a straight down, so there would be a play on a daily basis. But however, looking at it here with the euro yen, which is actually targeting the previous high, let's see if we can get it, at 102.19, which is quite substantial, still some ways to go. Established January 22nd, 2012. So obviously the tone for both cross rates is positive. And on this case, what we have is a histogram on the moving average convergence and divergence, which is obviously positive with an increase in momentum and prices. We're breaking a triangular formation here, confirm the up move supported by the fundamental in Europe. Comparing it with the euro pound in itself, we used to have two positions there previously, being able to take it out above the average and reopened another position on the euro pound at the price levels here at 82.95, which is not too far off. But however, this is what it had broken, the trading range of 82.61 and at 83.39. Anything above for the week closing above the 83.30 would still be positive for the euro pound. Of course, otherwise contradicting any fundamentals thereafter remains to be seen. However, the channel up for both currency pairs, the euro pound cross rate, sterling yen, as well as the euro yen, have been good, in addition to our sterling position previously made. So therefore, until such time that let's put this in a line chart, until such time that the dollar index achieves its initial target, of course there would be some play before it would move lower. That is what we would be waiting for. However, again, this confirms our market outlook dated February the 4th. And thank you very much for spending your time with us. Again, only the best for your trades. Thank you.